What's good, everybody? It's Jonathan coming back at you on another video. So for this video, I'm going to do a trade recap for today, this morning, for May 12th, 2025, uh, for the S&P 500. And before we jump in, right, we want to look at the Forex Factory, right, the news calendar. And of course, for Monday, we had a news day, which is why I was behind the charts trading. A setup presented itself, and I took a trade, and it resulted in a win, which is great. Now, if we look at the rest of the week, Tuesday we have core CPI, which I'm not going to be behind the chart trading. And usually, when CPI happens, I don't trade the day of CPI or the day that follows. So basically, CPI is basically like a 2 day vacation for me off the charts. So I won't be behind the charts Tuesday, Wednesday, and then Thursday we have core PPI, which I also avoid as well. So Friday I can trade this, that's fine. Um, so this trading week is I'll only be behind Monday and Friday, which of course Monday already happened, as I told you, results in a win, which I'll do the breakdown for in the next few minutes. And Friday I will also be behind the chart. So we'll see if price decides to deliver us a setup on Friday. So jumping in here, we are on the S&P 500. So of course, whenever we arrive on the charts, the first thing we want to do is, well, first look at the news calendar, right, to know what we have in store. Now, since we already looked at that, right, we didn't have any news today. Now we want to look for our bias, right, our higher time frame bias, which the higher time frame will be like the daily, 4 hour, 1 hour, etc. So you want to start from the highest and sort of work your way down to get a feel for where price is at and where it's going. So, in a case with bias, ideally you want to use the highest time frames bias, right? Because then that is the strongest uh, direction, right? And you want to trade in alignment with the flow of price, right? That's pretty straightforward. Um, some cases there it might not be clear on like the daily, so then you want to see if there's anything on the 4 hours, and then if it's unclear on the 4 hour, you want to check the 1 hour, right? And so on and so forth, right? But as you can see here on the daily time frame, clear as day, it is extremely bullish. Why? Because price was made his way up. These fair value gaps like here and this tiny one here all got blasted through, right? Price blasted through all of that. And then as I got up this morning, you can see this candle pushed above this high and also these highs. So price was basically just blasting all the way up. There's really not much else to talk about. It's clearly making higher highs and just going higher and higher. So there's really nothing to talk about in the daily time frame, right? We dropped down to the 4 hour time frame. You can see the same idea here, right? Price was kind of moving a little slow last week, and then out of nowhere, like towards the end of Sunday, prices aggressively blasted up and made new highs. So once again, we're bullish on a daily and the 4 hour. Same idea with the 1 hour, right? Price came up over overnight on Sunday, right? This all happened, and then at the beginning of London session earlier this morning, another aggressive move up, and prices continue going higher. So clear as day, it was bullish. There was really nothing else to talk about. So we have our bias. Obviously, because we have our bias, it being bullish, that means we're only looking to take buys for the day. We are not looking. See at the bottom right here, how it has a sell button and a buy button, right? On a day where our bias is bullish, we stick with that bias, and we only look to take trades in the direction of that bias, right? That's the point of a bias, to try to maximize the probability of a trade. So if we're bullish because we're expecting price is aggressively moving up and wants to continue aggressively moving up, we want to buy price to take it higher, right? Pretty obvious, right? The sell button doesn't exist. We won't even consider selling. So what I do here then, on I dropped onto the 15-minute time frame, and then I look for 8:30. So I will put a vertical line. I don't actually put the vertical line when I'm marking up the charts, right? Because my cursor pretty much has a vertical line, right? But I like to, I guess, do it for you guys, right? So here's the vertical line, the 8:30 open. If we look to the left, where is the most recent swing low? To the left of this vertical line, right? I'm pretty sure everyone sees it right here. It is this low right here. So there is day, last swing low prior to 8:30, right? Boom. So that's our liquidity. And then at least right now, obviously it can be subject to change, but right now the highest high and the high of the day is right up here. So I like to have both marked. Why? Because we have our sell side liquidity, which we anticipate price. We want to see price dip into that, right? To clear sell side liquidity and then make its way up. Where is it gonna go? Ideally to the high of the day, because if we expect price, if we're bullish on price, we expect it to continue making new highs. So it would likely have to at least take out the high of the day, right? Also pretty, obvious. So, and pretty logical too. So this is where we have things right at 9 o'clock. So whenever I'm doing my process of, analyzing and all that stuff, my trading windows from 9:30 to 11 a.m. Eastern on the days that I'm supposed to be trading. Ideally Monday through Friday, but if there's certain news events, then I'll be, depending on what the week looks like, I might be on the charts 2 days out of the week or 3 days or whatever it is, right? So, but whenever I am behind the charts, actively looking to trade, I try to get on the charts by 9 o'clock to then do my analysis, mark up my charts, and all that good stuff, right? So this is pretty much what my chart was looking like at 9 in the morning, right? Waiting for something to happen. So because 8:30 is the quote unquote start of the hunt where price starts going after liquidity, it's okay if the sell side gets taken prior to 9:30. But whenever the 9:30 open happens, which is 9:30 is a stock market open, that's when we want to see the sell side get taken. We pretty much want to see the low of the session be formed um, after 9:30, right? Because we want to see price make the fake move lower, which right here, this is the 9:30 open candle. Here we're on the 5 minute time frame, right? Because that's the time frame we stick with until price gives us what we're looking for, right? So clear as day, this aggressive candle right here, this is the 9:30 open, which is what we want to see, right? If we're bullish on price, we want to see an aggressive move lower that does what? That clears like lows. Well, this obviously is the most important low because it's the sell side liquidity. This is literally our point of interest, but obviously it cleared this low as well. So here we have the sell side liquidity get taken. So our point of interest, price moves to our point of interest. So now we put the eyeball, meaning that the liquidity was taken, and now price has become interesting to us, right? Because now price is doing what we're anticipating, which it's purging liquidity. So because liquidity was taken, now we want to see an aggressive bullish candle on the 5 minute time frame. Why? Because we don't want to see a little anemic move up, right? We don't want to see just a small little bullish candle and then we think like, okay, this is the break of structure, let's jump in. No, if we're anticipating price to be reversing, because right now, clear as day, right? As you can see, price is making lower highs and lower lows, right? Price is going down. We want to see a move that shows us that price wants to reverse, that price actually wants to start going higher before we jump in, right? We obviously want to take a high probability setup. We don't want to just jump in on anything. So clearly we see a bullish candle right here, but this is a very weak anemic move, right? This is not a persuasive move, a persuasive candle in the 5 minute time frame that lets me know that price might want to move higher, right? Like look at this aggressive bearish candle we seen at 9:30 and then this little tiny bullish candle, right? When we do find a candle that's interesting, then we'll drop down lower to the 4 minute, 3 minute, 2 minute down to the 1 minute time frame to then see if we find a break of structure. But right now, obviously we don't see anything. If you want to drop down to lower time frames, right, you can take a peek. But right now there's no structure. The last structure point is all the way up here, which is not ideal. And when I see breaks of structure, I want to see structure broken in at least two different time frames. So here, right, we continue to let price go down. Um, so here we have a move with a little more momentum, but once again, it's not really persuasive because the bearish candle is still bigger than the bullish candle. And obviously, if we want a break of structure to the upside, we want to see aggressive bullish momentum. We want to see bullish candles begin forming, and we want it to be something that's noticeable, either like aggressive candle or multiple candles in that same direction if it's not like as aggressive, right? So same idea here. Not really the most convincing candle, but I'll still drop down to lower time frames to see if we see anything, right? So right now we're not seeing anything. Um, this is still the last structure point before this move down, right? And here we have like a structure point here, a structure point here, but like once again, it's not really convincing. Right, so we see another push up, so then let's drop down to lower time frame. So this is what I do. What I do is I stay on the 5 minute time frame and I wait until 5 minute candles close. Then when they close, if it seems convincing or if it's in the direction I'm looking for, then I start dropping down to lower time frames to see if I see anything, right? And in this candle, we did not. So now we're seeing a candle with a little more momentum. So let's see if we find anything. We're not seeing anything on any of these time frames, right? Once again, this was the last structure point, at least on a 3 minute time frame, before this move lower. So nothing here. A 2 minute time frame, right? This candle made the low, so the last structure, last swing was here. Obviously, price broke that, but clear as day, there is no fair value gap, right? So there's nothing to do. And same idea here. This candle made the low, the lowest low. This was the last swing high. There's clearly no fair value gap within this high and this low, this range. There's no fair value gap that formed within that range. So there's still absolutely nothing for you to do, right? There's no trade to be taken, at least following my strategy and my model, right? So as you can see, price goes down, and right now this low still remains intact. So this is when I would do this, right? I would put a ray, and then I would put this reminder right here, waiting for another push below. Why am I waiting for another push below? Because right now we know that price is consolidating, right? Price came down, it kind of went up a little bit, then it came down a little bit, and price moved up a little bit. But right now this is consolidation. So like I want to see a liquidity grab and then a break of structure, a liquidity grab and then a push up. I don't want to see consolidation, right? Because then it's not like this isn't, no, we're not looking for that, right? We want to see price like go in the direction that we want it to go, right? So once I seen this consolidation happening, right, that's when I get patient and I say, you know what, I'm waiting for the low to get cleared again. Once again, it's like all of this is just consolidation, and I'm not going to trade any fair value gap that is in the midst of consolidation, right? And fair value gaps really aren't forming, right? So yeah, there's still nothing to do, right? I'm literally waiting for this low to get cleared before I consider doing anything, right? The one thing I did notice, as you guys can see, what does this look like, right? And I'll mark it for you guys. This looks like liquidity, right? Doesn't this look like a double top or quote unquote equal highs, right? Doesn't that look like liquidity, right? You have liquidity right here, and then what do you also have? A fair value gap over here, right? So as you can see, it's almost like upside targets are being formed to take a trade, right? Like when you, if you were to take an enter for a buy, you have liquidity here and you have a big gap that is still yet to fill. So like these are essentially reasons for price to want to go higher if price gives you an entry to go higher, right? So that is what I'm looking at as price is unfolding. So now here, right, price came down and cleared this liquidity, which that's what we were waiting for. We're waiting to see another push lower. So now we got our push lower. So now let's see what happens. Another candle lower, right? Nothing for us to look into. Boom. So now here we have a 5 minute candle. This candle is a little bit bigger than the candle prior. Obviously not the most convincing candle, but nonetheless I'll still jump in the lower time frames to see. Right, nothing here yet. Right, so pretty much this candle's the lowest low. The last swing high is right here. Right, because we notice this swing high exists on the 3 minute time frame. On the 4 minute time frame, the swing high still exists. Right, on the 2 minute time frame, the swing high exists. Right, so I'm looking at this swing high right now as the most recent swing high, which that swing high is obviously in the middle right here for you guys, right? So nothing happened yet, and then boom, we have another candle. So of course I'm gonna keep dropping down in lower time frames to see what I can investigate. Same idea here, we're seeing bullish momentum, but this is still the last swing high. 3 minute time frame, bullish momentum. This is still the last swing high. So we're pretty much stalking this swing high right now, right? Same idea in the 2 minute time frame. So I don't really need to look at the 1 minute time frame. Why? Because I need the last swing high to appear on two or more time frames, right? And right now on the 1 minute time frame, well, this is probably still the last swing high as well, right? But you guys get the idea. So then now another 5 minute candle, boom, another push up. So we're seeing that price is slowly inching its way up and nothing has happened yet. Like there hasn't been a break of structure yet, but I'm watching price. And now boom, there we go. So this, you see how there's one, two, three, four back to back bullish candles, right? It's not just one, even though this first one was a little weak. You have four bullish candles on the 5 minutes. This is like 20 minutes worth of bullishness. And then we drop to 4 minute time frame, right? What do we see here? I'll mark it for you guys right here. This was the last swing, swing high, right? That went down and then broke structure, right? So price doesn't have to close above it, it just has to trade through it. So even with this wick, it counts as a break of structure. So it broke structure on the 4 minute time frame, 3 minute time frame, of course it broke structure, right? Same idea with the 2 minute time frame, right? So pretty much all the confirmations are met. Obviously, you have fair value gaps. Um, so what I like to do is, in a perfect world, I like to take the trade at the biggest fair value gap. Well, this is obviously a noticeable fair value gap. Like you literally can't miss this gap. And what I also see here is, and I'll mark it in orange, right? It's orange right here. I also notice a inverted fair value gap. So this is also a bearish fair value gap that, eventually a bearish and a bullish fair value gap overlap in the same spot. So basically, this is almost like double support, if you will. Um, the other thing that I want to highlight is, of course, what I always do with every trade scenario, right? The last displacement high and the displacement low, right? This is the displacement range. Clear as day from this high to this low, we see that a fair value gap forms within this range. So this fair value gap is a fair value gap that we're using. Now, if the risk reward is not the best, then I'll try to use a deeper retracement fair value gap or make some adjustments. But on the 5 minute time frame, this was an obvious big fair value gap. And of course, you have the fair value gaps on like your lower time frames, things like that. So if you wanted to, you could have probably taken a trade from this fair value gap as well. But I just stuck with the 5 minute time frame because I was comfortable with the trade setup, right? Because basically, I'll put a long, right? There's a fair value gap, stop loss below the low, and then I now target a 1 to 1.5 risk to reward. Now, of course, the if you were taking this trade, you could take it up to, in my opinion, the final take profit, which would be up here, right? This is the high of the day. So if I was taking a trade, this would be the absolute final target, the terminus of the trade, right? But I don't do that anymore. I just take it straight to the 1.5 risk reward just to avoid having to go through taking partials and avoiding greed. It pretty much helps me avoid greed because this is my rule, and I know that so many trades that I've taken earlier in the year, had I just done this and put a 1 to 1.5 risk reward, that I would have walked away with profit, and like it wouldn't have resulted in loss. Like I basically would have been further along. Like my account would have been compounded much higher had I just stuck with this pretty much. So I'm just going to stick with this, and that is basically my trade setup. So now, of course, as you can see, right, taking the 5 minute gap, obviously this overlaps with the 4 minute gap and the 3 minute, et cetera, right? So now we just wait for a price to enter. So as you can see, my trading hours is from 9:30 to 11. And so what you notice here is that price came really close to 11 o'clock. Now, if I drop to a 1 minute time frame, this was the entry for the gap. Price tapped this gap at 10:58, 10:59. So right before 11 o'clock. So that's why I took the trade, because it fell within my confirmations, right, of finding a setup between 9:30 a.m. Eastern to 11 o'clock a.m. Eastern. So I had my once this setup was presenting itself, I put in my buy limit, and I had my buy limit set on my broker, and price tripped me in, so it put us in a position. And so now, right, we see this as the most recent high prior to the entry. So if I were to mark it with a black ray, I would need price to come up here and close above this high before I move my stop loss to break even and have a risk-free trade. The reason why I wanted to close above this high is because, at least from my experience with trading, at least this pair, sometimes price has a tendency to wick past it, but it doesn't necessarily signal that it wants to move past it just yet. And oftentimes when price wicked, it led to, and I moved my stop loss to break even, it led to me being taken out the trade prematurely and before price actually went in the direction that I wanted it to go. So that basically came to experience. So I wait until price closes above this level at whatever time frame that I'm trading in. In this case, 5 minute, 4 minute time frame, 3 minute, whatever it is. Wait for price to close above here. So long story short, I was in some consolidation, as you can see. This was very, very boring of just, prices moving sideways. But that is why we have a stop loss in place to protect ourselves and our account in case price goes against us, right? We're not trading recklessly, we're trading with risk management. So that's the beauty of having a stop loss. If price did go against me and pretty much reversed against me and went past as low, then the trade would be invalidated anyways, which is why the stop loss is under the low, because if price goes under, then I was wrong, right? It is what it is. Price consolidates and I'm in drawdown, of course, but that's why we have this stop loss in place. So it's in drawdown, but that's okay, right? Because we just continue holding the position and then boom. So we enter the trade pretty much at 11 a.m. and then at around 12:44, 12:45, that's when I was able to roll my stop loss to break even. So it took about 2 hours, I would say, from entering the position to this candle to then for me to roll my stop loss, you know, to break even. So I was pretty much trading a risk-free trade. And then from that point on, right, I pretty much just continue holding. Well, I had my take profit in place. So at least in trading view, my take profit got hit. However, my live feed on my broker is slightly different than TradingView. So unfortunately on my broker, my take profit didn't hit yet. So I had to continue holding it for a little bit longer. And then once price cleared this high, which it did with this candle at 240, that's when my trade on my broker officially hit take profit. So I pretty much entered trade at 11 and then got out with a win at 240. So if you do the math, that's almost what, 4 hours pretty much. Yeah, about 4 hours the trade. And end up hitting take profit. And as you can see, right, as we continue moving forward, just I guess go to live time, right? Price continued going higher and ultimately cleared the high of the day. So had I been trading how I used to normally with having my final target at the high of the day, as a final TP, then of course price would have smacked that TP and things would have been great. But I'm well aware that tomorrow is CPI, tomorrow's news, and I just well first off this trade was held for like 4 hours and like normally I want to be in and out of a trade ideally within the same hour. In a perfect world, a couple minutes. Ideally within an hour or two the latest. In this case, right, the trade took 4 hours, but that's part of trading, right? There's gonna be some components to it that are unexpected that you know that you just have to accept. This is part of the game, right? So this is why you have to be patient. This is why patience pays, right? And this setup was, the only setup I took since my last trade, which whenever I put the last video up on YouTube, that's when I took a loss. This was the first trade I took. I pretty much didn't trade for at least like 2 or 3 weeks, at least 2 weeks for sure, because there was just a lot of news. So the days that I was behind the charts, price didn't deliver me a setup. So I'm not gonna be angry. I'm not gonna fight it. I'm not gonna be impatient. It's just if price doesn't give me a setup, then there's nothing for me to do. There's nothing for me to trade. And then when price does give me a setup, I'll know it, right? It'll be obvious. It'll be clear as day that price has delivered me a setup. And then when it does, I'll take it, which is what happened in today's case, right? Price gave us all of our confirmations. All the confirmations were met, and so we took the trade, and it resulted in a win. So this is how you want to trade, right? You want to get clear in your mind as far as like what you're looking for your confirmations, like for bias, for confirmations, and obviously for like your entry. So it's not, I'm following the same exact model. I'm following the same entries. I'm not deviating and taking something else. I'm not using different confirmations for different setups, right? It's just I have this one model and this is what I follow, and this model is delivering me results, and I'm going to stick with it because I understand that time will do the heavy lifting, right? Over time, the account will compound because this strategy delivers a high win rate, and you know, for me, it's just I just needed to get rid of making silly mistakes and all that nonsense. So you eliminate that. If you eliminate FOMO, if you eliminate greed, if you eliminate all these like psychological downfalls that can affect you as a trader, and you put sort of like safety measures in place, or you devise a strategy that helps with that, then you can find success in this market. So great setup, great win overall. Um, and yeah, hopefully it was all clear, right? This is the same strategy for all of my videos beginning this year has been the same exact strategy, the same, finding the buys. marking up the 15-minute liquidity pool, waiting for liquidity to get purged, and then waiting for a break of structure in the opposite direction or in the direction you intended, right, with the bias. And then once you have the break of structure, you wait for price to dip into a fair value gap. And then after price dips into a fair value gap, then obviously you wait for price to make a new high, roll your stop loss, and then take price to your target. So in this case, because now I trade with a 1 to 1.5 risk reward, I don't have to worry about being greedy. I don't have to, excuse me, whew, I don't do any of that stuff. Because when price is my target, it'll take me out, and that'll be that, right? So that's the trade recap for this day. Hopefully, um, this trade setup made sense. Hopefully, it's starting to click, right? I want people to stumble across this video and learn something new, pick up on gems, but more importantly, to follow me along this trading journey so that you can understand what I'm doing and see how the same phenomenon in price repeats over and over and over for both the S&P and the NAS, right? So I took the S&P today because NAS um, didn't deliver like a break of structure, right? How S&P did, so that's what determined me taking a trade on the S&P, and then it worked out. So um, if you enjoyed the video, do leave a like and subscribe as I will be posting more content soon and as I go along my trading journey. It's just been a little bit slower because I'm just posting recaps of the trades that I actually take, right? So hopefully you found value and insight from this. So once again, guys, this is Joel, and I'm out. I'll see you guys for the next video.